everyone, welcome to the Stock Market Morning Prep video for Wednesday, May 14th. Well, we did get new highs yet again in the Dow Jones and the S&P 500, although markets were very quiet and subdued. Dow Jones up 19, almost 20 points. NASDAQ down again, down 13. S&P up 80 cents. Russell down again, down 12 and a half. So the song remains the same, right? We're making new highs in the Dow and the S&P, which are followers. However, our leader is leading, doing its leadership role by making new highs also as well. So the transportation sector made new highs yesterday. Very good sign. However, I'm very nervous because of what's going on internally, basically under the hood. I've seen this song before when we have the NASDAQ and the NASDAQ and the Russell not making new highs, actually have bearish patterns where the S&P and the Dow has. That results into a pretty decent sell-off. Now, everything does happen. Anything could change. We all know that, but we need to be ready and be prepared. That tells me, wait a minute, put the brakes on, reduce my exposure, reduce my risk overnight. I'm not looking to get pounded on when you wake up in the morning and see the S&P down 15 to 20 handles. So take a step back, guys. There's a lot of warning signs out there until the market can realign itself and we get back to making higher highs and higher lows with all of the indices, because right now we have market divergence, and this market divergence is giving me a big red flag, right? And the other major part of it is, if you're trading during the day, you'll know what I'm talking about. Stocks aren't moving. They're just not moving. They're not moving. They haven't been moving since the beginning of 2014. They are just not moving with the indexes. The indexes are moving all by itself. And you could see that here, and I wanted to post it to you. New York Stock Exchange new 52-week highs. Well, we made new highs yesterday, but guess what? This index did not, right? We made new highs in April. The indicator did not. We made new highs that barely just touched it, which did not. And this is all of 2014. This is 2013 in December, and as you can see here, we've been faltering and moving lower, making lower lows and lower highs. That's a bearish pattern. So when stocks are not making 52-week highs and the indexes are, that's a warning sign in itself. But let alone you put the Russell and the Qs making lower lows and lower highs, that's a big red flag for me. So I wanted to show this indicator to you to let you know, to show you what's happening. Here's the S&P down below. We're making new highs as stocks are not. So there's something really funky going on in the marketplace. And you, as traders, need to be aware, and even as investors, because if you have a big, long exposure, you should be buying protection, because right now protection is extremely cheap. The VIX is at 12, so option premiums are very inexpensive right now. And I would definitely be doing that, okay? Why? Another reason, bonds. Look at bonds. Bonds, we have this head and shoulders pattern. Now what I did was I did a projection. I wanted to project where the bonds could possibly go. Well, if you take this high to this low, which the neckline to the low, well, this projects up to 142.27. If that were the case, equities would get really crushed, and I'll tell you why. Because money would flow out of equities and into bonds and safe haven sectors, high yielding sectors that really produce a dividend, like utilities and staples. That's exactly what we've been seeing. So I just wanted to show you this. Can it get there? Yes. Will it get there? Who knows? Nobody knows. But just alone to make higher highs and higher lows in bonds is also another big red flag. Now, I think in the longer term, bonds will roll over again. But in the long-term picture, equities are doing quite well. And I'm not tooting the bearish Tony. I'm just telling you what I'm seeing in the charts. Can things change tomorrow? Absolutely. But until they do, you giving a word of caution out here. Now remember, this week is a monthly options expiration, so we do usually get a bullish tone to the marketplace. You maybe get one day of selling, and then the next 2 days we get some push to the upside because of the shenanigans that the market makers like to play during options expiration. So you're really not going to see some real good movement, I think, until next week. So we have 3 days of this backing and forth here, but watch out. I'm just telling you, be careful. I think the markets are vulnerable at these extensions. Now, I think that we push back to the 1618 extension of the 1914, 1918 area. I think that's going to be a great opportunity to look to short the market if the market indeed roll over. Remember, we don't just short because price got up there. We want to get a reversal candle and we want to get take out the previous day low, and then that's when we can start selling rallies. At least for to try a small lot to see where this goes. Okay, but right now. The 1618 extension is absolutely possible that we can get there at 1916. And here's the hourly chart of the S&P, E-mini S&P contract. Now we have the Dow Jones making new highs yet again, as you can see. So our leader is making new highs where stocks are not. Okay, big red flag. Now the transports, for that matter, is leading, so that's a good sign. But remember, one index can't do it on its own. So let's keep an eye on the other indexes. And remember, guys, I've seen this before where you have the IWMs rolling over along with the Qs, which is NASDAQ, and then the other indices will eventually follow. There's no question. You're not going to have one index, which is the transports, lead the way higher. I just don't see it. And remember, that could happen, but I just don't see it at the moment. So now we're back above the 200 SMA. Let's see if what happens in the next few days. Maybe we just chop around until Friday, and then we get some big movement to the upside and or the downside come next week. But that's usually what happens during the expiration. And take a look at this, and you can see Qs did try to break out, but actually failed right at the resistance line here. Okay, so it's trying to do its job by breaking out to the upside, but we'll see. I don't see much movement now. Remember, let's talk about real quick some of the sectors. I do like the home construction looking a little bit better with lumber prices moving higher. Some of the builders are looking a little bit better. Still early, but let's start stalking that sector. Solars are looking good again. Okay, now remember, the solars coming in out of favor during the course of the year, but I do like the solars yet again. Energy is looking great. I like energy. I like energy on pullbacks. I would like to see crude oil start to move a little bit higher. And then I'm looking at some of the 3D printing stocks. They're starting to base a little bit, looking better. It needs a little bit more work, but there's going to be a lot of opportunity in some of these stocks and some of these sectors. So keep an eye on it. And of course, the almighty TLT. If you like the bonds, you can play it via the TLT. If bonds start to really spike higher, watch what the TLT does. You can take that for a trade. And lastly is going to be gold. Gold could go either way. But if obviously we get some big selling pressure come in the markets, gold's going to explode higher at least one more time. Remember, gold in a longer-term picture is still in a bear market, no question about it. But they do have these violent retracement rallies to the upside where you could take advantage of it, right? Just a few ideas. Right now, nothing actionable. We'll keep an eye on. In the meantime, look at the best trade setups. If there's nothing there, don't push a trade. It's not worth it because you're just going to have to make it back again. It's not worth the effort, okay? Look for the best trade setups, and it's been far and few at the moment. But remember, things do change, and they change real quick. Okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.